Ba-ba-da-bum-bum-bum-bum. Hey, hey! Ba-ba-da-bum-bum-bum-bum. Hey, I'm Jeremy Lefebvre. Ba-ba-da-bum-bum-bum-bum. Hey, buy meme stocks and taxable accounts. Ba-ba-da-bum-bum-bum-bum. Welcome back to Strongman Personal Finance. I hope you enjoyed my impression of Jeremy Lefebvre, the man that charges people $20,000 to learn how to read a 10K. Now today, ladies and gentlemen, we're going to review my change in my civilian federal retirement 401k, also known as the thrift savings plan. And I'm going to show you how my method of building wealth is the true way to build lasting, sustainable, tax-free wealth. Now, this isn't some sales pitch, okay? I'm not trying to sell you some stupid product, and you might not even have the thrift savings plan. The whole purpose of this video is to show you that if you save money diligently, consistently, and you buy broadly diversified index funds over your life in tax advantage accounts, you can significantly increase your wealth very, very quickly. So what we're going to do, and I did a video like this about a month and change ago, where I showed you the balance of my civilian 401k account. And today I'm going to show you where it's at now. And it's mostly from contributions because I have a very high savings rate. Savings rate, in the long run, will crush any speculative gains that you might get by throwing a couple $100 into a meme stock. Because this stupid bull market that we're in is not going to last forever. And when it dies, all these clowns on YouTube like Sain, Meet Kevin, Stunk Mo, Keenan Grace, Jeremy Lefebvre, they're all going to go down because they're freaking clowns, because they're teaching terrible crap. I know what I'm doing because I've been doing this for 10 years and I've built a lot of wealth. So let's go look and see how my account has changed. So this, ladies and gentlemen, is what I showed you guys last time. This is my retirement account from the job that I started 3 years ago. Now, as of the last video, I had saved a total of $28,687 in my 401k equivalent. And that's with a pretty low salary. Now, I've gotten some raises, which is great. So now I can actually start maxing my TSP. Had to spit there. And now that I'm maxing it, my account balance is basically exploding because I'm putting so much money into it that there's no way it's not going to grow in the long run. Sure, there may be down markets, and if that's the case, if you're buying consistently, you'll be contributing to your retirement plans, and you'll be buying shares of all these different funds on the cheap. So last time I had my investments split between the C fund, the S fund, and the I fund. Don't worry about what those are, but basically they're stock funds. And you don't have to split your funds that way. It's up to you. And I decided to make a change, and I transferred all my money from those different funds, and I put it all in one fund, the L2065 fund, which is a target retirement fund. I know it's boring, and you're not going to 50,000X, but as I'll show you, it's all about your savings rate. So if you look at the bottom here, on May 5th, the last time I did this video, roughly, I had $28,687. And then, a little over a month later, that balance has increased to $32,314. So I have saved, including, I guess a little bit of share price appreciation, an additional $3,626 in the last, 40 days? Now think about that, ladies and gentlemen. Imagine if you stuck to that for your entire working life. Every single 2 weeks, you contributed the maximum amount to your retirement plan. Think how freaking wealthy you would become just by being consistent. And the beauty of this account, ladies and gentlemen, is that I don't have to pay any taxes because I'm contributing to my Roth TSP. So what happens is my paycheck gets taxed, and then $750 gets contributed every 2 weeks into this account. Once that money goes into this account, it grows tax-free for my entire life. And when I'm 59 and a half, or in some cases you can take it out at 55, but we're not going to cover that. At 59 and a half, I can take out whatever money I want. I could take out $1 million, and I wouldn't pay a dime of tax. Now, if you're watching Sain, you'll see on his channel that he has like $165,000 in Robinhood. Robinhood is not a tax advantage account. So if he has massive gains, let's say in 20 years he has $1 million in there. If he decides to sell that, he's going to be taxed extremely heavily because those are going to be taxed at probably long-term capital gains rates, which are 0, 15, 20%. And there's even an additional surcharge if you're high income. But if you sell stocks on the short term, you're going to pay short-term capital gains rates, which are taxed at your marginal tax rate. So if you're in the 37% tax bracket and you live in a state that also charges income tax, if you buy and sell a stock, even if you have a massive run-up because you got lucky with a speculative meme stock, you're probably going to pay almost 50% of your gains in taxes. Whereas if you put your money in an account like this, all of your gains, they're not going to be taxed, okay? It depends on whether you have a Roth or a traditional, so you need to do your research on that. But if you contribute to a Roth and you hold it and you start withdrawing at 59.5 and you meet all the requirements, you're not going to pay taxes on it. Now look how simple this is. My freaking money is going into one fund, the L2065 fund, and it's now at $32,000. And on the right here, I have my transaction history. And as you can see, every 2 weeks, so for example, we'll zoom in a little bit. On June 11th, 2021, I contributed $750. Now, if you're paid bi-weekly and you have 26 pay periods, $750 will let you max your TSP for the year. But if you're 50 and older, then you can put more, but we won't cover that right now. So every month or every 2 weeks, I put $750 in there, and then I get a match. This is the matching contribution, this $124 every 2 weeks. So if you add those two together, equals $750 plus $124.52. That gives you $874 that you're putting away for your future every 2 weeks. And if you have 26 pay periods, let's see how much that is per year. $22,737. And that's not even including your Roth IRA or whatever IRA you have. That's an additional $6,000 per year. And if you have a spouse, you can put even $6,000 more. Now, you may laugh at this account, and guess what? This isn't my only freaking account, okay? This is from my new job that I just started 3 years ago, and I've already saved $32,000. And it's going to explode, not because I'm some investing genius that knows the hottest stocks, but because I don't pay any fees, I'm not going to have to pay any taxes, and I am putting $874 every 2 weeks into this account. But yeah, you can't get rich. You have to get rich super fast or you're just going to be broke your whole life. Guess what? If you have a high savings rate, you're going to be shocked how fast your wealth grows. It's going to blow your freaking mind. This is the true way to wealth. You don't gamble on stupid meme stocks or short squeezes because at the end of the day, you see all these clowns making money. A lot of people are also losing a lot of money. And if you YOLO $10,000 into some stupid stock and then you lose half of it or all of it, you're basically knocked down to square one. You have to start all over again. Whereas if you had just contributed regularly to your retirement accounts and maxed them out and got the tax advantages, which are freaking huge, they are massive and will save you hundreds of thousands of dollars, then you'll have way more wealth. So, in 40 days, I've increased my wealth. All of it is going to be tax advantaged by $3,600. Now, at the end of the year, I'm going to do another one of these videos. I'll probably make them once every month or two to show you how fast you can build your wealth simply by dollar cost averaging. So please don't listen to these losers on YouTube that are pumping garbage investing stuff. All they're going to do is eventually screw you over. And if you somehow do get lucky and make money, you're going to pay a lot of freaking tax because you're probably buying and selling and trading, which triggers short-term capital gains rates. But I know that's boring. Oh, you're so boring, strong man. You don't have any hot stocks. Well, guess what? Who's going to have more money in the long run? Mr. Day Trader? Mr. Hot Stock? Me. And you, if you actually listen to my advice. Now, you don't have to put your money in the L2065 fund if you're in the federal government. But I like it, and I'll show you why. Now, this is a target retirement fund. So what that means is, over time, they change your asset allocation from more stocks to less stocks as you get older. Because the older you get, You want to transition some of your portfolio into bonds to kind of preserve the wealth that you've built. Now, you don't have to use a target retirement fund, but I like it because as of right now, the L2065 fund is basically 100% stock. So it's got 49% of the fund in the S&P 500. It's got 15% of the fund in the extended market index, and it's got 34, almost 35% in international stocks, excluding emerging markets like China, because they don't let you invest in China, sadly, on this. Now, over time, let's see if I can actually adjust this. Or this is good right here. So over time, what happens with these target retirement funds, so on the left here is basically now. And you'll see the green, that's S&P 500. The blue is the extended market index, that's like small stocks in the U.S. And then internationals in purple. So as you move from left to right, you'll see that eventually the green, the blue, and the purple start to go down and down and down. And you see the orange and looks like, what is that? Another shade of purple goes up and up and up. Those are the bond funds. So you're becoming more conservative as you get older. Now, you may not like the glide path, which I want to be more aggressive as well. So what I'll do is I'll probably just trade out the L2065 fund for the L2070 fund whenever it comes out. And then I can modify my asset allocation that way. That's it. That's all you have to do. Okay, you don't have to invest in this one, but at least look into target retirement funds if you don't know what you're doing. But ultimately, it's up to you. Now, that's it, ladies and gentlemen. If you like this video, like the video, subscribe to my channel, hit the bell button for notifications, buy my book, Stop Being a Broke Loser. It's on Amazon, $3 ebook. I know it's going to destroy your finances. And y'all have a wonderful, delicious, superstitious day.